What's up? How you doing, world? Welcome to another edition of Market Watch. Today we're going to be talking about portfolio allocations, how we can compare aggressive portfolios with conservative portfolios. We might get into some stock news, some financial news, and we might even jump into a little NBA.
Hey, I like that. I like that. Hey, your
Yes,
boy
sir.
Jerome speaking on Capitol Hill. I think tomorrow it starts.
Okay, okay.
Gonna be on talking tomorrow, man. So
Rome and Rome. We're gonna tune
see
in
what
for that.
happens. We're waiting on that, like the jobs report, man. See what happens to the market. Because I tell
Yes,
you,
sir.
when people don't realize that stuff affects that market. I mean, more so than people ever imagine.
Yeah, man.
That man says
Yeah,
one thing with a certain tone, it could send markets into a frenzy. You know what I mean?
yeah,
So
yeah, yeah.
it's it's
And
exciting when that dude gets talking.
I know, I know. I think tomorrow's gonna be some good news. I just have a hunch. But
Yeah, I expect him to
because
raise rates, but
yeah, today was a green day for at least for my stocks. I assume for the market too, because but I don't, So I'm looking forward to what tomorrow brings. But we'll see, man.
yeah,
We'll see.
it's crazy because stocks ended up mixed, and it's almost like the bulls, like everybody's ready to take over. You know what I
Yeah,
mean?
yeah,
Like we're ready to run. We're done with this volatility. Like it's time to go. That's what I,
yeah.
you know what I mean? And that's why any kind of little hint that things might be getting better, investors are
Right.
right back in it. You know what I mean? Like it's insane. I don't blame
Yep.
them. That's why we're in the business. You know what I mean? That's why we
Yeah.
invest as retail investors. That's why institutional investors invest because
Yeah.
you want gains, right? You want the returns.
Yeah.
So you know,
Yeah.
it's
So,
exciting. Man. I like when that dude talks and I listen to
uh-huh.
it.
Right, right. Me too, man. I mean, I really have just recently got into him because of you, man. You know what I'm
Oh,
saying? You
good,
talking to
good.
me
Just
about him,
listen to that,
yeah.
man.
I jumped, been watching the whole feds and the rates and how they affect the markets and all that, man. But before that, I would just watch financial news and how that affects, the ebbs and flow of the market. But yeah, that the
It
Fed,
does, and it all starts with like where I mean, coming. You got to look at things from a macro perspective. You know what I mean?
yeah,
One thing I'm doing, I took again, take. I'm learning just like everybody else still.
yeah,
I'm taking a class on Udemy that talks about that, man. That if you want to understand stocks and sectors,
uh huh,
you got to understand how commodity prices, how oil prices, how central banks are interacting with one another, what's going on, because
sure,
all that stuff has an effect on, you know what I mean,
yeah,
on what goes on in our markets. I mean, across the world.
right, right, absolutely, and that's what I've been focused on the past few years. Uh, so what what we're gonna talk about today, man? Portfolio allocations, like uh, so when we talk about portfolio allocations, I know we've talked about it before, but what are we uh talking about? We're talking about
So, like somebody wants
sectors.
to be, yeah, like if someone wants to be aggressive, right? Talking
Hmm.
about, there's there's people out there that have high risk tolerances. First, you got to find out what your risk tolerance is, right?
Yeah.
If you understand what your risk tolerance is, now you understand, all right, how can I structure this, right? So if I want to be very, very aggressive, I can put 100% of my money into equities, right, in the stocks, and nothing in fixed income and holding nothing in cash. It's like,
Hmm.
I'm
Hmm.
full on aggressive, hyper, extra aggressive, and then you have
Yeah.
people that are very conservative that might, are living off of this, and they don't have as much, whatever the case is, or they know that they are already in retirement, and now it's just time to preserve, and they want to be a lot more
Mhm.
conservative, right? So you might only
Yeah.
have 25, 30% in equities and 70% in fixed income, and and hold on to cash. So
Yeah.
you know, things like that, man. There's a million ways to skin the cat, dude. And I mean,
Yeah.
I'll show you just easy,
So
easy ways that you can do. You can
so
look at.
talk to me about uh so 22, I guess, maybe the tech stocks took a beating. So talk to me about moving forward because before 2022, tech stocks were the end thing, man. Uh,
Oh, especially when
are they
COVID happened. You know what I mean?
are they going to be lucrative moving forward, or do we
I,
need to move a new direction? What's going on?
Let me tell you. I mean, you know as well as I do, dude. Look, I mean, look at what we're able to do here.
Yeah.
15 years ago, 20 years ago, look, think back, we wouldn't have been able to communicate like this with one another.
Yeah. Yeah. I was just
Technology
talking to
is
people about that.
evolving. If you buy a computer today, when you walk out of the store with it, it's already outdated. You know what I'm
Yep.
saying?
Uh-huh.
So, I mean, I don't know that the tech sector will ever not be something hot, especially talking about like now with cybersecurity. And I mean, there's just so much that goes into technology. I mean, we use it on a day. You can't get cars built. Ford and place couldn't get cars built because it couldn't get semiconductors. You know what I mean?
Right. Yep.
I think technology is, I mean, it's here to stay. It ain't going anywhere. You know what I mean?
Yeah. 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 That I think the same thing, you know.
They've been roaring back. I don't know if anybody's seen Apple
It's
and
only
Nvidia
gonna
and yeah,
the
Meta.
technology is
And
only gonna get better. You know what I'm
yeah,
saying?
we hadn't
And
made any. And if you haven't watched, go back and look and see what January, February, March has done for tech. You know, the tech sector.
yeah, yeah, yeah. And computers are only gonna get smaller. Your phones are gonna get smaller. Batteries are gonna get smaller. And,
Yep, smaller, last longer. I mean,
and
it
more.
won't be long before Tesla's building batteries for homes, dude.
Yeah, yeah, yeah. And so
So,
uh, that 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 lets me know that all these semiconductor companies and chip companies are going to be in business for a long time. And
yeah, it's only going to continue to grow exponentially and evolve, man. I mean, again, I remember watching Total Recall in the '90s. Remember with Schwarzenegger? And the
yeah,
dude started the movie, and he's got this big old video screen, and he's talking to his wife on like a video call. And this is like the late '80s, early '90s. You know what I mean? And now look,
yep,
we're able to do this. You know what I mean? This stuff on a day-to-day basis. How people communicating across the world now.
right,
So
right.
I mean, just to think where we're at now and how much it's grown.
Yeah, I was
It's
talking
here to
to
stay.
my yep. I was talking to my son about the same thing this weekend. We looked at. You was looking at my senior report card. I pulled out my little 12th grade yearbook, and he was looking. I had a bunch of B's and some C's, and he's like A's and B's. He was like, "Where your A's, Daddy? You got one A."
Oh, that's good. Good.
you
Hold
know,
that accountable. That's right.
yeah. But
Yeah.
I said, you know what I said? I want you to be better than me.
Hey, I tell my son that all the time, and I sincerely mean it, though. You know what I'm saying?
Yeah, yeah.
Like, I try to do right by you, and if you can be better than me, that's how, you know what I mean, this stuff
That's
grows. And
that's
I
what
mean,
we want, right?
generationally, you know what I mean, just become better
Yeah.
and better people.
But
So I'm
I
with
had
it.
a it was like micro applications or something, a computer class, and we
Uh,
got to talking, and I wasn't good in that computer class, and so I was letting him know like that was pre-internet. Like we had computers in the library, but that was
right.
about it. You know what I'm
Yeah,
saying?
yeah,
You
yeah.
know, and so we were just talking about
I remember
that,
that.
and it wasn't that long ago. That was 91, 92. You know, I mean, it don't
That's
seem that long
crazy.
ago,
I
but
remember when the internet came on. I was in like seventh grade, sixth grade, and I remember like staying after school for a computer club or something, and
yeah,
it was like, yo, you can get on this thing called the internet. And you go in there and get on whatever the hell the internet was at the time, the World
right,
Wide Web, as we knew it, right? The World Wide Web.
yeah, yep,
That's what I knew. You know what I
absolutely.
mean? And so I remember that.
Mhm.
Think what you can do now. I mean, everything is online.
Yeah, yeah.
Yeah, tech's here to stay. To get back to the point here, I think technology is here to stay. I like the
Good.
tech sector. Uh, again,
Yeah.
I own Apple, I own Nvidia.
Hmm.
Uh, so I'm not making any recommendation to anybody. But when you hear me
Yeah.
talk about these companies, I'm not really talking about anybody. Like if I own something, I'll let you guys know that I own something. You
Yeah.
know, and
Yeah.
but I think tech is here to stay, man. And I think Nvidia is not going
Yeah.
anywhere. Apple
Yeah.
obviously is not going anywhere,
Right.
and it's only going to continue to grow.
Yeah. Yeah. Me too, man. There's a couple that I'm not sure about, man. Like Facebook. I'm on it and I love it, but I don't know.
So you
That's that
know
whole social. I mean, I like the idea, but the young people are moving away from it.
what
And
they did right though is they bought Instagram,
yes,
and they bought
yes,
Instagram for like $2 billion.
yeah, yeah,
Like after 2 years of being in business, Facebook gets valued enough to be able to purchase Instagram for $2 billion.
yeah,
And
yeah,
now they're just. I think I read an article, and this was years ago before I even got into the business, dude. That
mm,
Facebook, this is when they were starting to talk about buying Oculus and getting to the VR world, and uh, that they were going to be some of the leaders when it comes to AI. And you hear a lot about AI coming out now, right?
yeah.
Artificial intelligence,
Artificial
right?
intelligence.
Chat
Yeah,
GPT and everything's artificial intelligence. And I
yep,
think that they are one of the trendsetters. I think that Zuckerberg is going to be one that Facebook. There's a reason he went to Meta. is what I'm trying to say. You know what I mean?
Mm-hmm.
It's much more than just Facebook. It's much more than
Yeah.
just the social media aspect. Like, them dudes got aspirations. These guys are not stupid. Elon Musk is not a dummy. You know what I mean? Mark Zuckerberg's not a dummy. Mark Cuban's not a dummy. You know what I'm saying?
Right.
These
Right.
dudes, they're good at what they do, and they think on a much
Mm-hmm.
broader scale than just social media. So, yeah.
And as smart as they are, they have even smarter people working for them, and
And it's smart
engineering
enough to
for them,
hire people to do
and
a good job of
software
things that they
developing for them. Yeah, absolutely, man.
Yes. Yeah,
And
man.
and so, yeah, you know, and I'm not saying it's gonna fall off a cliff, but you know, yeah, but Instagram was a great purchase for them, and hooking it up with Facebook, it sort of helps keep the younger people. Another
And the
one that I
Oculus, they just cut their prices on the Oculus too, man. The virtual reality headset. I got one of those things, and they're
do
pretty
you
awesome.
are they
Yeah, I
my
bought one off a student. I know it sounds bad, man, but I bought one off a student who was trying to get rid of it. I was like, "Yo, I'll buy it from him. Bring it in.
yeah
It
yeah
works. It's cool. I'll buy it."
yeah
From him. So I bought it, man. I mean, it's awesome. I mean, it's tough to always play that and
yeah
PS5,
yeah.
run a business, and do podcasts, and still be a husband.
I hear
But
you, man.
they're one of the leaders in that stuff, man. And it's only, like I said, it's only going to grow. I think Meta.
So what do you think about the metaverse? Have you been to the metaverse? Because I've been, and it's wild, man.
Okay,
It's
so we're
wild.
talking about the metaverse. We're talking about like Roblox, like artificial
No,
worlds.
it was like a world where you can purchase stuff,
Oh
and
yeah, like you buy land and you can buy
yeah, and you
yeah,
can buy like all kinds of real estate, everything that's in the real world you could buy in the metaverse.
yeah.
I just didn't have any money to buy at that time, but I'm
I
pretty
guess you
sure.
did because there's people that are worth a lot of money because of that stuff, man.
Yeah,
People that
yeah,
buy land and buy islands and stuff in the metaverse and hold on to it.
yeah.
People want that. You know what I mean? You go live again. Total Recall.
So yeah, but
Totally crazy.
what I was told is that the idea behind it is just like the real world, man. It's like you get it on there before the next person, and it's yours, and it grows in value as the years go, and you sell it on down the line for more than you purchased it for.
Yeah, it's
Yeah,
modern day world living in a techno
in the
world, man.
in the techno world,
You know what I'm
yeah.
saying? Like it's I could go there and be whoever I want,
Hmm.
whatever I want. I
Yeah.
mean, it gives people the freedom to like dude. Again, tech is here to stay. Y'all understand me? Anybody's watching, anybody listen, you follow us.
You know what?
I'm here to stay. I'm
I
not
have,
telling you all technology, but I promise you, there's some ones out there
and I swear to you, I was so enamored by it when a coworker of mine showed me, but I forgot about it. But just this conversation, I'm gonna jump back in that thing tomorrow and see
yo, I've
what
never done
what's
it.
available for purchase.
I've never been to. I mean, I've seen the Roblox worlds and I've seen the Minecraft worlds and stuff
Yeah,
like that. So I figured
yeah,
it's somewhere you can go, and so I'm gonna check it out.
yeah,
I mean,
yeah.
again, tech's here to stay, boys.
And
Just
for whoever thought of that, you know what I'm saying? Like that's genius level thinking. I
dude,
I don't think I don't think I ever thought about that when I was
I'm telling you,
growing up.
sometimes it's the simplest of ideas, and you just find
Yeah,
people that can put it together and make it work.
yeah.
Like Elon Musk in his book, the biography that this lady wrote, she says that he's at college parties and they're hanging out at parties with girls and everything, and instead of talking to the girl trying to get a number or whatnot, this dude is asking. You ever think about like self-driving cars or battery operated cars?
Uh,
Like this is what these guys think about, man. You know what I mean? And look, more power to them because
it's
the
it's
jokers are
it's why
trendsetters, dude. I mean,
it's why he's the richest man in America, but it's also why he doesn't have a girlfriend.
yeah, that dude there, I bet you it don't matter. He walk in anywhere, it's Elon Musk. That like you
So
better off probably not being married, dog. You know what I mean?
no, now, yeah,
Yeah,
don't get married. But
yeah.
before he had all the money, he probably couldn't hold a decent conversation with
No,
any
no.
chick
It's
at
one of
all.
those cats that people say, "Oh man, that dude's weird." Man,
Yeah.
it's funny because man, I got a kid in class, and he was like, "Coach, I was chilling with this. Met this kid in one of my other classes. And for his terms, he's kind of nerdy." He
Mhm.
said, "But he's cool as shit." I said, "Dude, those ones that y'all refer to as nerdy, those are the ones that you need to keep in contact with
Gonna change the
because
world.
and those cats just what's cool to you is not cool to them, but they're into things that they think are cool,
Yeah.
and you better have a level of respect for that. They may not
Yeah.
be the best hooper, but
Right.
the dude that started Ring Doorbell, you hear about that?
Yeah, I
Stuff that
did.
was out for $1 billion. Come on, man. A
Crazy.
doorbell, a camera, and a Wi-Fi component, and an app.
Yeah.
And
Yeah.
sold everything for $1 billion. It was just ahead
An
of its time.
idea. Yeah, an idea.
I tell my students all the time, you're one idea away, guys. And I
Yeah,
use those things as examples. Like,
yeah.
so we're doing that in my class right now, man. I got the stock market game going in one of my classes.
Okay.
Yeah. So competing. I think I'm number 9 in the state right now.
You know what? I don't know if you. Oh, number 9 in the state.
Yeah.
Wow, that's awesome, man.
Well,
That's
so this is what I had to train myself to do. I had to, I'd say, train myself. I had to switch my mindset into becoming a trader and not an investor
okay.
because it's such a short period of time.
Yeah.
You know what I mean? So we're
Yeah.
going like February to May.
Oh, okay.
There's only, I mean, there's some things that are going to be like your hyper growth, right? So if you jumped in on Nvidia, like I got in that Meta, and I was up my portfolio being up like $1,300 on Meta. So everybody started with $100,000 portfolio. You know what I mean? So,
Yeah.
but yeah, my kids have been doing it, man. So it's again kind of some of the things that showed me guys like, yo, this is possible. This is real.
So this is what I think you can do. You may have already done it. You may have already thought about it, but I think in a class like yours, bro, and is I think that if you could do something like Shark Tank, you know what I'm
We
saying?
do that.
Just come up with like the best ideas and who can bring their ideas to life, and
We
then
watch
maybe
a lot of Shark Tank in class, man,
get
because
some
I want
people
those
to
kids to think
invest.
on a
Yeah,
different level, like think
yeah,
outside the box.
yeah,
And I tell
yeah,
some of them cats in there because like, oh, coach, man, this ain't got nothing to do with me. You got some cats that just don't want to do right.
yeah, yeah,
And
yeah, yeah,
I tell them, God, I put it in whatever terms you want. However, I need to explain this to you because I can
yeah,
give it to you however you need it.
yeah,
I promise you, this stuff works.
yeah, absolutely.
It works. You know what I mean? And so, and a lot of it is, research. And again, that portfolio allocation that we're talking about,
Hmm.
being able to set yourself up so you know when to be aggressive, what risk you're willing to take, and what you're not willing to take, so that you can
Yeah,
kind of structure your portfolio to,
yeah,
try to fall within, the standard deviation, bell curves, and all the stuff that they talk about.
yeah.
I mean, so
That's what's up, man. That's what's up. I bet your class is fun, bro. You need to record. You
see,
need
as
to
an
record
adult, you say that, like, you know what I mean?
some.
Like a lot of the kids just like, oh, you know what I mean? Like, it's just work. It's just an elective. I'm like, God, right? You have no idea. You have no
Yeah,
idea. You guys will just buy in. I promise you learn something.
yeah, yeah. Absolutely,
I'm teaching
absolutely.
my kids now. I have a sports and entertainment marketing class. We're building stadiums. They started their own sports franchises. They got
Okay.
to physically build the stadium and
Yeah,
run there. You know what I mean?
yeah.
Ticket sales, brochures. They got to create a ticket, like a whole shebang. So some of the
That's
kids are having a
awesome.
good time with it. Yeah.
Yeah, yeah.
So
That's some great stuff, man.
yeah, teach the kids, look,
Yeah,
think on
man.
a bigger scale, baby. Think on a bigger scale. You got to.
Yeah, absolutely, bro. Shit, what's happening in the stock market news, man? Anything? I
Look, like I said, Jerome speaking, man. That's always big news. I know that there's, investors waiting for again more economic data to come out. You have things like jobs reports coming out that people are,
yeah,
the financial institutions are sitting back, chomping at the bit to see what he says and what
yeah,
comes out of those numbers, and uh, that's where you're going to see, uh, the biggest moves. All right, so here, brace for some volatility because while market was up today, it
yeah,
was
bro.
up a little bit last week on the Friday.
Any now,
Say it
any
again.
earnings coming out soon, man?
There's earnings all the time, man. Um, a lot of the bigs have already
Oh
reported
yeah, there
earnings.
you go.
You know what I mean? But like Oracle still has to report, like BP. Dude, I don't think I've talked to you since I made this trade. So check this out.
Uh-huh.
I'm part of a newsletter that I pay for,
Yeah.
and I go through notes, kind of reading and just reading about different sectors and stuff. And I come across Travel Centers of America. All right.
Yeah.
I go through, start doing, a little bit of valuation stuff on it, looking at, P ratios. Anyway, so I end up
Uh-huh.
buying. All right. My dad ends up hitting me up, says the same thing about this thing. He's like, hey, buy me 100 shares of this. I'm like, it's funny, Dad, because I was just about to buy myself some. So anyway, we buy it like
Hmm.
Wednesday, right before close. Wake up Thursday morning. I bought like $49.80. Wake up Thursday morning. Turns out BP was buying them out at $86 a share. So I mean, I almost doubled my
Wow.
money overnight. Yeah, pure by chance, dude. Pure chance, pure luck. Had no idea. And the only reason I bring that up is because I was just
Wow.
looking. 13 companies this Friday. You got BP reporting earnings. I'm like, man, I know when they report earnings, their conference call, earnings call is going to talk about purchasing
Yeah.
Sims of America.
Wow, bro.
So
That's
I
why.
will tell
That's
people
why.
this: don't go chasing it. You know what I mean? It's worse to lose money. It is far worse to
Man,
lose money than missing the opportunity to make it. So
that's why. A1 Capital is the best, brother.
I appreciate that. But look, it was pure. Like I said, I bought it just because I done it for my own personal portfolio. My dad
Yeah.
happened to call me and tell me the same thing. I'm like, yo,
Uh-huh.
well, okay, go ahead and buy it.
Yeah.
I bought it.
Yeah.
So
So what
worked out
about?
okay.
So is talking. So is like getting something like Vanguard or the S&P 500 ETF. Uh, those things like they've been going up for years. Like, so would that be considered conservative or aggressive? I would think it's aggressive. It's because I've only seen it go one way, but is it
Yeah, well, I
conservative?
mean, some of it is depends on how you break it down, man. Because you got to look
Okay.
at like Vanguard does a good job, I know, of keeping their fees very, very low on their ETFs and on their mutual funds. You know what I mean?
Okay.
So one thing people got to be aware of when you put together a portfolio, if you're either a good stock picker or you're not, right?
Hmm. Hmm.
And if you choose to try to do it on your own, you're not very good at it, then now you're just gambling money away. Excuse me. So if you don't know that side of it and you're not comfortable doing that side of it, that's where the ETFs and the mutual funds come into play.
Yeah.
All right. So taught my classes this today, man. Talk about ETFs versus mutual funds. Just look at the fees that you're having to pay, right? Expense ratios,
Hmm.
because that will eat away at your returns. So you could easily be paying like, 1.25%.
Okay.
And if you're paying that 1.25%, we'll just say that, we'll just say it's 1% you're paying. If the fund returned 8%,
Hmm.
well, you really only return 7% because of that fee, because of that
Okay.
1%. You know what I mean?
Yeah. Yeah.
And I'd be lying to you to say that I don't. I mean, I do it for all my clients, try to keep them. I prefer ETFs because they're so much cheaper than mutual
Yeah.
funds, but there are
Yeah.
some very, very good funds out there. So if you don't mind paying that for some of those, more stable returns or just some of those longer generating returns,
Hmm.
sometimes mutual funds are a good way to go. Also, you know what I mean? So, go
Yeah.
ETFs, you can go mutual funds, but I try to limit fees because again, people pay me for managing their money. So
Right.
there's already a percentage that's coming out that you're having to pay from your returns already. One, right?
Hmm. Hmm.
I don't get paid based on how much you make. I get paid a fee, right? Based
Yeah.
on assets that I have under management.
Okay.
So on top of that, now you have these other fees, like a mutual fund that might be 1.5%. So that's 2.5%, and
Hmm.
there's some fees that you've had to pay every year. So again, if you brought in 10% that fund, well, you really brought in 7.5% because 2.5% you paid in fees.
Okay.
So
Okay.
one thing
I
to look at when you're trying to build a portfolio and you start talking about portfolio allocation, making sure
definitely.
you understand, let's look at some of the ETFs versus, and I had my students do it today. I put together a little worksheet and
Hmm.
we just went through like different sectors, right? Let's look at the energy sector. And we did XLE, we did
Okay. XLE.
Vanguards, and we did FENY Fidelities.
Okay.
And looked at them and just looked at, all right, what are they charging in expense ratio, right? What are their fees? And
Yep.
then the other part to it is take a look and see what the returns were over the last year, last 5 years, last 10 years. So I gave a
Okay.
worksheet and told them, hey, you guys, felt worksheet, did, a couple with them.
Hmm.
And then you start seeing kids like, coach, well, how come, this mutual fund is like 1%? These other ones are like 0.1%. Well, that's what it comes with a mutual fund sometimes. And they're getting better, mutual funds, but some of
Yep.
the better returning funds are going to have a higher expense ratio. So you're going to pay higher fees.
Yeah.
When you put together a portfolio, just be mindful of that. Just let everybody know. Just be mindful of the fees that you're paying.
Yeah. Yeah. Absolutely. Uh, but in minus the fees, uh, so I'm trying to get to aggressive versus conservative. Like, So is it based on how much uh, you make? Like if you buy uh, or if you add to your portfolio uh, stocks that uh, make you 8%, and if you and then you add some other stocks that may make uh 4%. Does that mean one was a more aggressive move than the other, or
No. So as far as so when we're talking about portfolio allocation, when you're talking about an aggressive investor,
yeah?
we'll just say that you have $100, right?
Mm-hmm.
So with that $100, we'll just say that you say, "Yo, I want to be aggressive," and and we go through it. There's always a risk questionnaire, things that we go through with clients, have them fill out, uh, based on some of their answers and things of that sort, and what they're explain to you, their objectives and everything.
Okay.
If you're going to be an aggressive investor, I might put you in what's called a 95-5 portfolio, right? So that's 95% of that dollars is going into equities,
Yeah.
stocks, mutual funds,
Mm-hmm.
right? That's equities, and then 5% is fixed income or holding on to in cash,
Okay.
right?
Yeah.
Or 90-10 would be 90% of your money's in stocks, 10% fixed income cash, right? So then you
Hmm.
get, so you have 100% conservative, like, I just want it all in fixed income, right? Super ultra
Okay.
conservative, don't want to risk anything. And then you have, like 10% equity, 90% fixed income. And then you have, the other end of
Yeah.
the spectrum, like I said, is 100% equity, right? All stocks, all, you know what I mean? So there's
So
different
you
ways to do
decide.
it.
So you decide whether they're aggressive or conservative in the beginning.
Yeah, for sure. Before I take any client on, or not, well, before I do take any client on, sit down and try to have these conversations with them, so understand, like, all right, so let's look at your age. All right, so okay,
Mm-hmm.
you're 54. You're looking to retire within the next 7 years, 8 years. We'll just say, do you need to be aggressive? So let's look at what you have put away right now. All right,
Yeah.
kind of what you think I need to be able to live the lifestyle you want when you retire. Well, when you go through all those things, you also have to find out, like, if somebody's 55 and they're 60 and they're ready to retire in the next couple of years, probably don't need to be as aggressive. All right,
Right. Right.
if you've built a nice nest egg and you can live off of that, as opposed to somebody who is 22, fresh out of college, making great money, right, six figures,
Mhm.
say they're making $100,000 a year,
Yep.
and they're looking to be aggressive with their investing. Well, they have a lot more time to make up if there are bad years in the market than
Yeah.
somebody who has 5 years to retire. You know what I'm saying?
Absolutely. Yep.
Or
Yep.
be aggressive, not necessarily. I mean, like, my dad just happens to be an aggressive investor. I even talked to him like, "Dad, there's no need to trigger." And my dad's like, "Yo, don't matter." Like,
Let's roll the dice, son.
well, and then it's not even that, roll the dice. That, I mean, that's how my parents were able to retire the way and live the life that they live now, is because he's always an aggressive investor, and you know, eh,
And he's
not
good at it.
stupid. And so I don't want anybody to think like aggressive means that we're taking chances and we're
Unnecessary
rolling the
risk.
dice. You know what I'm saying?
Yeah.
And like, aggressive is saying, like, yo, I want to put my money into things that, yes, there's going to be there's going to be higher risk, but I'm okay with taking that risk because I know
Mhm.
how much the anticipated returns or expected returns
Right.
are. Right. So
And
just
if you
putting more
hit,
money in stocks as opposed to bonds, obviously you're going to be more aggressive than somebody that has more money in bonds,
yeah.
fixed income,
And I
cash.
imagine the idea is to hit on those aggressive instances more times than you miss, and you'll be doing pretty good. I,
Yeah, man, because there's really, really good funds and really good ETFs out there. I mean, you look at some of these ETFs and what they've returned. I mean, here, I'll just pull up and look up VOO. There's the Vanguard S&P 500 ETF, right? So
okay.
tracks the S&P 500.
Yeah.
Over the last 5 years, you're talking almost 48%. Over the last 10 years, 159% it has returned.
Damn.
You know what I'm saying?
Yeah.
All
It's
right.
like 16% a year. Mm-hmm.
Yeah, dude, I'm telling you. And then you look at things like XLE. All right, these are just ETFs that I'm going through, and this is just
That's
the
what
individual.
makes me. That's what makes me say, "Oh, it's an ETF, which is supposed to be safe, but it looks aggressive to me."
Well, this is okay because you got to understand also when you're looking at some of the stuff, and when you're talking about more so aggressive, you can break it down now into different caps or different sectors, right? So you have
Yep.
large cap, small cap, mid cap, right? And that's
Yep.
where the portfolio allocation comes up. And you say, well, how much? So we'll just I'll go through just a simple portfolio.
Okay.
Before I do that, XLE over the last year up 14.5%. Last 5 years up 33.82%. I mean, Max going back to, gosh almighty, going back to, what is this, January of 99. All right, it's right before 2000.
Okay.
This thing's up 275%.
Wow.
You know what I mean? So
Yep.
there are really good ones out there. I mean, the expense ratio on this thing is very, very low. It's like 1/10 of 1%.
Yeah.
So, and very, very, I mean, get high rating. So anyway, let's get to the allocation, man. All right. So you want to talk aggressive and work our way down? You want to start conservative and work our way up?
Let's do conservative and work our way up.
All right. So with a conservative portfolio, all right, conservative investor, something like 10% in large cap equities. All right. So when you talk about large cap, they do it based on the size of the business, right? So you got large cap, you got mid cap, you got small cap.
Yep.
And it's all based on the number of billions of dollars that they make. And right. So your large cap stuff is going to be like, people investing in your Apples and blah, blah, blah. And then you have mid cap and your small cap. So like the Russell 2000, right? So mid cap companies. So with the large cap, you have probably 10% allocated of your money to that. So again, we'll say $100. So 10 of your $100 is going to go into this fund that deals with large cap companies. They invest in large cap companies.
Okay.
And then you have 5% of your money that goes into, we'll say, mid cap companies, right? So $5 goes to mid cap, $5 goes to small cap, $5 might go to international equity, right? Emerging markets, developing markets.
Mm-hmm.
And then you might keep 50% in some kind of fixed income, like bonds, right? A bond ETF, not necessarily go buy, a U.S. Treasury bond, though some people do that, but just be invested in bonds because it's a lot safer. And then holding 25% in cash. All right. So if we do the math, you add it all up, it equals 100%.
Okay.
All right. So that's something that is more conservative. Going up, you have something that would be like moderately conservative. So again, instead of being 10% large cap, now they're going to be something like 25% large cap, 5% mid, 5%, small cap. All right, a little less in fixed income. So as you work your way up the spectrum from being conservative to being aggressive, more of your money will be in, as a conservative investor, more of your money is in fixed income and cash. Less money is in equities, right? Large cap, mid cap, small cap, international real estate.
Right. Yep.
Right. So as you become more aggressive, you start putting more of your percentages. Like an aggressive investor might say, I want to go 50% large cap. I want to go 15% mid cap, 15 or 10% of my money in small cap, 15% international, fixed income. I don't want anything in fixed income. 5% in cash, but I want everything else. 5% maybe in the real estate fund.
Yeah.
But I'm 95% of my money is in equities. 5% of my money I'm holding in cash. All right. So.
Okay.
All right. So I mean, really, that's all it is. So trying to break it all down as to how aggressive you want to be.
Yeah.
If you want to be aggressive, well, there are ways to do that. You just have to see what's out. And realistically, the small cap has really been good throughout the last 2 years. You know what I mean?
Yep.
So when the market had been struggling, you had these small cap companies like the Russell 2000 that were doing pretty well.
Right. Quite a few of them on there doing well. Yep.
Yeah. So, that's always a good thing, obviously, when things are doing well, if you invest in them. Right. There's nothing more frustrating than realizing like, dang, I didn't invest in it. It had done well. Nobody want to do it because it was small cap or whatever their reasons were.
Yeah.
But it's always nice, yes, if you catch on before the wave is done. Right. So at least so you're not buying at the top and selling at the bottom.
Yeah. Yeah.
There's nothing worse than that. You know what I mean? Buy at the top, sell at the bottom. Don't do that. So just wait. If you need to wait. You may not get in at the best price, but just wait. Be patient.
Yeah.
So it's a lot of, let's put more of our money. So we could talk about a large cap portfolio.
Okay.
Man, look at this. I know you can't see this, but I'm about to measure it out. The IWM, which is an ETF that tracks the Russell. up since March of 2020 until right now. It is up 98%.
3 years. Wow, that's 33% a year.
Yeah,
Wow.
and even higher than that, it was up to 156% starting in
Wow.
November of 21.
And what ticker symbol is that?
That's IWM.
Wow. Uh, have I looked into this one? Nope. Wow.
10
Yeah.
years up over 100%, man. So
Mm-hmm. That's
yeah,
good.
yeah. So again, I mean, it's always good to know about that stuff, or be able to get into it before it starts to fizzle, and
Yeah. Gives a
shift
gives a
allocation.
nice gives a nice dividend also, which is always good.
Oh yeah, 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 yeah. I mean,
Mm, yeah.
it's got a. I mean, I guess the yield is 1.35%, but annual payout 258.
Right.
It's, I don't know. I mean, expensive is relative, but $189 a share, give or take. And the expense ratio is, I mean, almost 0.2%. So
Right. Absolutely.
0.1%. So it's all right. So if you got an aggressive investor, you know what, man, you're not going to be able to see this. Let me do this so that people can see. All right, pull this up. I'm going to pull up my screen real quick, and I'll show you.
All right.
Just people can see it. I know if I'm throwing out percentages, and I get excited, I start talking fast. So I apologize to everybody. So I figure, let me pull up exactly what I'm talking about,
Yeah.
so you can see it, and I just think I'm some weirdo on speed and no craziness like that.
Yeah.
All right, here we go. All right, you see that?
Yeah.
Okay, so here we go. Somebody aggressive. All right, and these are just examples. All right. So somebody that's aggressive, right? You might want 50% in large cap. All right. Huge companies. Mid cap 15%, right? So this
Yeah.
would be somebody, like I said, I was explaining earlier, fixed income. That's some of your safer investments.
Yeah.
Cash, obviously safe, except for accounting for inflation. But there's very little in fixed income and very little in cash.
Hmm.
They are heavy. Let's go large cap. And again, knowing as far as a large cap, small cap, where they fall on that spectrum, because a lot of people are like, well, what's the difference?
Right.
Because there's a bunch of different. I'll be honest with you. There's a bunch of different uh, categories within a large cap, right? So you have large cap value, you have large cap growth, you have large cap blend. So it's like, man, well, now I'm getting inundated with like categories and subcategories and subcategories. You know what I mean? Yeah, I
Hey,
get it. Yeah.
just tell me
So,
what to buy.
oh yeah, no. And look, if I had that magic wand, I mean, if I knew that magic crystal ball,
I
I mean, I'd
know,
take
right?
some of the better ones out there and show people. But I'd say like SWPPX. All right, so this is the Charles
Yeah.
Schwab S&P 500 index.
Okay.
Something like this, when you look at whether they're a blend, are they a large cap value or fund? I mean, it just,
Yeah.
I have to pull it up on Charles Schwab. Can you still see my screen?
Yeah. Yeah. I'm sharing it.
Okay,
Hmm.
let me show you something, man.
RIA benchmarking. Hmm.
Yeah, this is. It's nuts. I love all the security though. I got to type in passwords and 27-digit codes, and
Okay. Yeah, you got the real stuff.
I mean, again, it's when you're in the business, you own a business. I mean, it's
It's just what's
uh,
necessary.
so here we go. SWPPX. Now everybody can see. This way you can see exactly what I'm seeing. All
Yeah.
right. So you look at this overall rating, 4-star. Right, Morningstar, they rate things right,
Yeah.
highly reputable. All right, so they're 4-star. All right. Historical returns, they're above average. Historical risk,
Hmm.
average. So if you look right here, they are a large cap mutual fund
Okay.
blend. It falls under blend, right? So they're a large blend. They're getting a little bit. They're investing in a little bit of growth companies, a little bit of value companies, but it's a large cap, right? So if you were looking at something like that,
Yeah.
all right, I'm going to take SWPPX, and we're going to go ahead and go put 50% of my money. So if I have $100,000,
Yep.
50,000 of it is going into this fund.
Already.
And I try to limit the number of funds again because of fees also, and then you get a lot of overlap sometimes. You know what I mean?
Yep.
So I'm looking at this fund here, and I'm looking at okay, I'm also going to invest in BOO, which is the Vanguard S&P 500.
Yep.
Well, when you look at it, they're also a large blend. You know what I'm saying? And if you look at the look, Apple, Microsoft, Amazon, Google, Berkshire Hathaway, Google, Nvidia, ExxonMobil.
Yeah.
Here's SWPPX's holdings. Apple, Microsoft, Amazon, Google, Berkshire Hathaway, Google. You know what I mean?
Yeah.
So people are like, oh, I'm gonna invest in this fund. Well, sometimes you have overlap. So you know what I mean?
Right. You
When
may
it's up, it's up, and when it's down, it's down. But you have nothing there to, I don't want to say counteract, but or I don't want to say hedge. But that's why you diversify, right? So if this is doing really well, if this is not doing very well, this one might be doing very well. You know what I mean?
Right.
When you reallocate, right, and you rebalance your portfolio.
Mm-hmm.
So we would take that. So we want to make sure there's no overlap. All right. So limit the amount of funds. So then you look at something like, all right, well, let's look at a mid cap. Go through mutual funds. Here we go. All right. Modify this stuff. Fund category. So here it is. Everything you got here, right? Mid cap blend, mid cap growth, mid cap value, small blend, small growth, small value, right?
Yep.
All these things you can, you know, what I mean, you can look at. So, let's just look at the mid caps now. All right. Look at this. Just mid cap. Now, this is with no other filters or any other screeners that are on, right? Yep. 956. That just goes to show you that just in the U.S. equity part, blend growth value, 956 different funds.
Wow. Wow.
All right, so you go through and you find one, and I'll show you one that I just researched not too long ago, right here. Mid cap index fund.
Okay.
There's their top 10 holdings, what they hold.
Yeah.
All right, now you can go through and look at how have they done, right? Over the last year, all right, down 5.5. Last 5 years, they're up almost 40%. Last 10 years, up 139%.
Yeah.
Over the lifetime of the fund. Look at this.
Yeah, I love that right there.
But again, you also have to be willing to understand how much the expense ratio is, which look for this. Look at this. Very, very low.
Okay.
But you also have to watch now, again, like I said, with fees, because sometimes there's loads, right? Load fees, right? Front load, back load.
Yeah.
Not to just get into all that stuff, but just make sure you understand the fees that you're paying. All right.
Yeah.
So this one that is not a terrible fund. All right. I'll pull that same thing up over here. Do it by symbol. I'm sure it's going to pop up. One more. Yeah, there it is right there. Look. So there you go. All right. Well, the last 3 years, I mean, overall, they're a 4-star. Last 3 years, 5 years, rated as a 3-star. Over the last 10 years, 4-star. But they're, again, mid-cap blend, right? So a little bit of value, a little bit of growth.
Yeah.
All right. There's their how much, 16% is in information technology, industrials, and then within that category, there you go. You can see their top 10 holdings that companies that they own.
Yeah, man. Sales now. So are the big companies? Are they making money off of doing that, or Do they have to sort of
That
pick
model is gone. You know what I
Okay.
mean? That model
Yeah.
is gone for a little while, man, just because it was just getting expensive. I mean, if
Yeah.
anybody is watched or knew anything about trading in the '90s,
Yeah.
I started in '94, something like that, '95. My dad let me
Yep.
start doing it.
And I looked
Just
into it and
every
I
trade.
decided not to in the 90s because it was
Yeah, dude,
expensive.
it was expensive. I mean, it really was expensive. And you look at it. I mean, I remember when like E-Trade and Scottrade were like, "Oh, $5 commissions."
Hmm.
And people were like, "Oh man, yo, that's a
That's
bargain." You know what I
nothing.
mean?
Yeah.
Right.
Yeah.
Otherwise, before, every time you trade, it was $30, $35, $50. You know what I mean? So those
Yeah.
brokers were making money.
Yeah.
If you ever seen the Wolf of Wall Street, dude, that dude is not lying. I mean, that joker is making money. You know what I mean? There's so much money being made, dude. So
Yeah.
that model's kind of gone, man. I think what they're doing now is in order to attract more people, like, hey, we
Mhm.
can cut down on our, on our fees that we're charging people, and we can still be very profitable. You know what I mean?
Yeah. Yeah. Yeah.
So
Because you offer an expertise, you offer the research capabilities that not a lot of people, regular folks, have. So that's why I would think that you guys, yeah, would definitely be someone, that if that people would want to reach out to. You know.
yeah, for sure. And again, I mean, I get my research from companies just like they do. They have a lot of in-house because they have the capability. I mean, you get a kid fresh out
Hmm.
of college or doing an internship, and
Hmm.
like, come here, man, you can do all the grunt work, dude. Realistically, and that's
Yeah.
all those dudes are going to learn, and they're going to soak it all up, and
Right.
it's the best thing for them. But they have those people to be able to do that stuff, and it frees up, what I mean, time to do other things.
Absolutely.
So I get my information from, like times, like articles from Schwab or Vanguard or wherever.
Yeah.
But I use that same stuff, you know what I mean? And they
Yeah.
can get their information in house, and they go out and they buy it.
Yeah.
So naturally, you would think that we would know what the heck we're talking about.
Absolutely.
All right.
Absolutely.
You know what I mean? Like people are like, "Yo, well, just tell me what to buy." Well, if I knew, I mean, it's so much more than that. You know what I mean?
Hmm.
I can tell you
Hmm.
a recommendation or something, but
Yeah.
yeah, give me something to work with, man.
Absolutely. So let's pivot
Yeah.
and let's talk about the. I know I said we're going to talk NBA. Let's talk about this first. What do you think about uh, the NFL and them uh, not allowing uh, Amazon's Jeff Bezos to buy or to even bid on the Redskins or
Man
the
has that right. That man owns
Commanders?
the Redskins. That
So
man has that right. Apparently,
so
there was an article written by the Washington Post
uh huh.
that's owned by Jeff Bezos
Yep.
that was
Yep.
talking about a toxic work culture and blah blah blah. So that's what I read about it. That the dude is just like, yo, you know what? You want to talk bad about us? I'm not even going to give you the opportunity to bid on it. And
Right.
you got something to, you know what I mean? When people want to bid on it, you're denying people, you know what I mean? Especially
Yeah.
what, third richest, fourth richest man in the world.
Yeah. Yeah. It seems like it was why would you like it seemed to me like it was being petty. You know what I'm saying? Uh, and I know maybe they said it was a conflict of interest because he owned the Washington Post, but it was more because of the articles that was in the Post.
Yeah,
You
because
know,
they were writing articles saying that it was a toxic work culture to work for the Commanders.
and now he wants to buy the team, but he wants to improve the work culture, man. And first of
But
all,
my deal is like again, a lot. I mean, it's
he can
if
buy
that dude
the
didn't work there, you don't know if that workplace was close. You might be people there that loved it. And you have other people that were like, yeah, it was awful.
yeah.
It's just like leaving a different school, man. Some people leave there and they're happy and they love it. Some people leave because I hate this place.
So what do you think about it? I mean, he's someone that could buy the whole damn league. You know what I'm saying?
Yeah, I'm
To
with
not
you.
be allowed to
I bet
bid
that
on a
hurts that
team.
man's pride. Like, yo, you just turned me down. Do you know who I am?
Yeah.
I bet
Yeah.
that's how
Exactly.
dog, no lie. If I was worth that much money, I would probably feel the same way. Like, dog, do you know who I am? Like, if I want to, I'll give you double what you're asking
Yeah.
for.
I'm a pencil whip you.
Yeah,
I'm gonna make
yeah,
you
like get
sell
out of
me
here,
this
dog.
team.
What,
I'm
what,
a,
I mean, What did this dude Walton buy? The heir to Walmart bought the Broncos for $4.65 million?
Yeah.
Man, come on, man.
I'm gonna give you an offer you can't refuse. That's what it would be. I'm gonna put 10 bill on the table and dare you to turn it down.
Yep. And I tell you what, man, I think some of it could be for show also, and it could be trying to drive up price.
Yeah, that's
what I did. If he comes back and says, "No, I really want the team," all right, what are they offering? Or what are they asking for?
Right.
4.2, 4.5, something like that.
So I would respect the league more if they just came out and said, "No, we're not going to sell to the richest man or the second richest. He's right behind Elon Musk, or right? I don't know.
I think he might be number 3 because the Arnault dude is
three.
Nonetheless, third richest man in the world.
Yeah, we're not going to sell to the third richest man in the world because we're going to give minorities a chance to bid on this team. I would respect that, man. But right now, I'm like, let the man bid. You ain't gonna give it to a brother, no way. That's the number. I need they have a minority head coach. You know that, right? They need minority ownership in the NFL, and it can start with Washington. You know.
Hey man, look, this dude Jeff Bezos went to Princeton, I believe.
Yeah.
Raised in Houston. I didn't even know he was raised in Houston and in Miami.
Yeah, I didn't either.
Graduated from Princeton in 1986.
I'm telling you, I know
one boys are ahead of their time, dude. You know what I mean?
His wife is a blessing to all minorities. I promise you that. I'm so thankful he married her. You know what I'm saying? What she's been doing for black colleges and minority, programs and foundations. I mean, it's historical. And I don't know a reason. I don't know reasons beyond. I've never heard her give interviews on that stuff or anything, but I know that what she's giving is going to change, a lot of generations, and and that started because Jeff Bezos married her, because she wouldn't have that money if she didn't divorce us. But
hey, man, you know what? If I had that much money, or was with somebody with that much money, I'll find a way to make it work.
Could you though? If you knew that the only thing keeping you there is the money, and you can have half of that if you left. Would you?
Somebody messed up along the way.
Yeah.
You know what I mean?
Yeah.
Like somebody messed up. Mm-hmm. And for that dude, it's like, yo, if she leaves me, I'm giving up half. If I could keep her, it's cheaper to keep her, they say, right? If I could keep her around, she may not ever spend that much money.
It's cheaper to keep her unless
cheaper to keep him, you know what I mean? Not to take away from the ladies or nothing, but
unless you have so much money that you can't even fathom. You know what I'm saying? Then what's cheap?
I'm with you. Well, my deal is if it's me and it's my money, if I got $100 billion, I got to give her $50 billion. Or keep her, work it out, and know that she might not ever spend $50 billion in her lifetime. I'm getting off a lot cheaper.
But it takes two to tango, man. She got to say, you're right, I want to work it out. And
she must not remember signing that prenup. We're not playing that.
He had to sign a prenup, right?
I don't know. I'm sure she got something.
Some rich people are. No, she got half. But but in the prenup, he wouldn't have agreed to half, would he? Because she gonna get that without a prenup. So maybe they didn't do a prenup because she got like half. But don't you know how like when you're so rich, and you're rich because of stock value, right? Stock prices. So
pretty much.
So what you do is you say, okay, I'm gonna find a way to make this stock price go down. So my worth can go down. We're gonna get the divorce, and then I'm gonna put this out, that out, this out, that out, right? Make the stock price go back up. And now look at him, he back on top.
Yeah. He kept a bunch of his shares. And I'll tell you this. You say that, and it doesn't sound that far-fetched, man.
Yeah.
You know what I mean? Like, let me go ahead and like Amazon. Man, let me look at how
Yeah,
Amazon been on a downtrend forever. It seems like.
I know, right? I know.
And let me tell you this:
I ain't a
Amazon, yes,
lick
has
with
been on a
Amazon,
downtrend. But
man.
I tell you what, from the
I
time
bought.
that was announced, he may not have
Uh,
had to write that check yet. You know what I mean?
yeah,
So
yeah,
let me
man.
drive this price down as much as possible, and now write that check because I'm worth a lot less here,
But so
and then
he
watch it
probably
go.
he's probably already written it because she's given. So this is the thing, man. Like however much she got, she may have gotten 50, 70, 90 billion, whatever she got. Out of all, I know you heard about her giving all these millions to these different HBCUs, right? I just read an article where out of all the HBCUs she gave money to, and all the minority charities she gave money to, it came up to $4.6 billion.
MacKenzie Scott, that's her name.
Yeah, yeah, Lady McKenzie. uh, but see,
Worth
what
50, worth 53 billion.
53 billion, and she went on a tour just giving millions to all these schools, and it only came up to less than $5 billion, bro.
Oh, she got 38 billion,
Okay, 38.
making her
Oh
the
yeah,
richest woman in the world.
and that
How do
wasn't
you
even,
think that
that was
made? How do you think that made Jeff Bezos feel? Like, haha, you cannot ever beat Elon Musk, and I'm even more important than you because I'm the first. I'm the richest woman in the world. You're number two as far as in the world, and I'm the number one woman in the world. Like, you can't even beat Elon Musk out. Probably why she
I had,
left him.
this the thing though, like when I got divorced and I had children and had to pay child support, I respect my children's mom enough to be like, she deserves that. I think he's the same way. I think he's like, she deserves that. I haven't heard any
Look,
ill
whatever went on
will.
between them, you know what I mean? And
Yeah,
don't blame them for it because look,
yeah,
there had to have been some good times. Otherwise, why you marry somebody and be with them for
yeah,
that long? You know what I
yeah.
mean? And
Absolutely.
I promise you, I would try to be as amicable. God forbid that ever happened to my wife and I, man. God
Yeah.
forbid, knock on wood, that if that ever happened to me and my wife, try to be as amicable as possible.
It
Like,
ain't
hey,
gonna, it ain't,
the house is yours. Like, I'm
hey
not
man, if
fighting.
it happened to y'all, if it happened to you and your lovely wife, it's just there's no use for me. I
And let me
ain't
tell you
doing
this: it happened between me and my wife. Dog, I'll never do it again.
it.
She said she'll never do it again. We might just live as life partners. Like, we're not married anymore. But you know what? Girl, I still love you. You love me. Just you ain't got to wait on me. I ain't got to
Yeah,
wait on you.
man.
I'm gonna do it, please.
Hey, I'm
But
saying,
nah, man, it's been good, man. I
yeah,
love my
yeah,
wife.
yeah, man. Yeah, no, but yeah,
Well,
I think yeah, it seemed like she have a good heart, but I just wanted to put that out there, man. That you know she's doing a lot for the minority community, man, and keep it up. Appreciate. So I don't know who to thank, Jeff Bezos or McKinsey.
both of them.
Thank him for his money or her
But
for.
apparently, she got in on the ground floor of Amazon also before he started. You
So
know what
was
I
she
mean?
like
So
a
I'm
worker
sure
or
she might.
something?
No, she might have been, an early investor also. You know what I mean? Being his
Oh, okay.
wife, and
Hmm.
invest a little bit of her own money. So I'm
Yeah,
sure.
yeah. So yeah, okay,
I
yeah,
don't think she
that
come
makes
from. I
sense.
don't think she come from broke backgrounds. You know what I'm saying?
Yeah, yeah, yeah.
So
That makes sense. Okay, yeah, but back to what we was talking about, man. I just feel like, I would like to see, they seriously entertain some minority ownership groups for the Washington Commanders, man. Uh, what what about uh Ja Morant, bro? You heard that? You heard that
ah,
news, man?
dude, and I'm
Like,
a Ja fan, dude. I think Ja one of the best in the league, man. I
hey,
saw
man.
the video, and then you read about the article about what happened in the summer with a 17-year-old in Ja's backyard. Right? I don't know what all went on, but I'm sure like cooler heads always prevail, and you learn that as you get older.
Is
Uh,
he is he falling off, man? Like, what's up with
I don't think
Ja,
so,
man?
man. I think sometimes that Ja's a young dude, and I think that it's not easy to take on all that at once. You know what I mean? At such a young age, it's a lot to be able to be mature enough to handle that stuff and not. And I think he's just gonna learn. You know what I mean?
No, I feel
Now,
that, man.
could be that Joker done lost his damn mind. You know what I mean? He's just gonna fall off the boat, and it is what it is. But I just think,
Yeah.
you know what I mean. Cats get, you know what I mean. They come to the league. Yeah, it's tough to come. Think about it, dude.
And this is
I was
like,
18,
so,
19, 20, 21 years old. You pay me $30 million a year. I don't know what
yeah.
to do with $30 million a year. I do whatever the hell I want with $30 million a year.
And I'm gonna be honest, like people, like the first thing like people usually do is get a gun, even if it's just for protection, and it mostly
Don't
is for
blame them.
protection.
Don't blame
Especially
them.
because I don't either. Like you know,
Don't blame them.
so
There's crazy people out there in the world, and
yeah,
because that dude's a basketball player, let that man eat in peace. Let that man, you know what I
yeah,
mean?
yeah,
That man alone. No, he wants to sign a damn autographs. That man's trying to come out and be a normal damn person.
absolutely. And so this is what I need to ask you because to be honest, I didn't read the news fully, but it's just going on what I read and may have missed some of it, but it seemed like was he pointing it at somebody or a group of people,
No,
or
man.
was
I
he
don't know about all
just
that.
just
On the
being
video
sh-
that I saw of him, he's kind of smiling, you know what I mean, laughing, and he kind of points like this, and then he holds the gun up and he, you know what I mean, and puts it down. So it wasn't like he was pointing it at a camera
Oh,
or at
okay.
anybody in the video
Oh,
I saw. You know what I
yeah,
mean?
yeah,
But
yeah,
I mean, look, I wasn't there. I won't speak on that man's behalf. I know
yeah.
that regardless of how that works out, that's one of the baddest jokers in the NBA right now.
Man, he is so athletic. You
Dude.
know, I mean, it's unreal. You know, uh,
And he looks like he has fun out there.
yeah,
You know what I'm saying? He's a competitor, but he looks like he's having a good old time out there on the court, man.
yeah, yeah, and he's he is. I want to say he still is in line to at least receive votes for MVP.
I don't know if
You
they're
know,
gonna allow. I don't know if NBA gonna allow him to do that now.
yeah, I think this will hurt him. You know what I'm
That's for sure
saying?
gonna hurt him.
Yeah, but I mean, especially depending on how many games he missed. But he was a legit MVP candidate. You know,
Yeah.
no, he's not.
If Luca don't get it, dude, I don't know. I don't know.
Dallas sucked though, man.
That's what
They
makes him
don't
the
play.
MVP.
No, it's not. They losing. They don't play defense, man. Like,
Ever. They just picked up Kyrie, but he's still Luca. I don't care if they losing or not. I mean, Luca's go out there, he's gonna drop 40. Luca's gonna average 33 points a game. He's gonna
yeah,
get his.
he
And Mark
is
Cuban
gonna get
better
his.
pony up and get some money out that damn pocket and go get some players to surround him with. But
I mean, he
I know
got
Luca's
Kyrie. He got another purely offensive player that doesn't play defense.
and
Like,
my
it's
deal
got
is
to be a team,
Kyrie
man. He needs some
does
three. He needs some 3-and-D guys, and he don't
for
have them right
sure.
now. You know what I'm saying?
He I don't know if the Kyrie pickup was all that in a bag of chips. I think Kyrie, like, you better prove yourself, dog. If you can't make it work with Luca, dog, it's a you problem, in
Yeah,
my opinion.
yeah. That's a you problem if you
Like, you've
can't make.
been with LeBron, you've
Yeah,
been with KD, you've been with now
he
Luca.
the Celtics. He,
Yeah, you were
you know what I'm saying? Like
you're in
people forget
Boston.
that was a short-lived stint, but
Yeah,
he
that's
was
right. I forgot about that.
man.
So
Yeah, he's blown up every situation he's been in, so he needs to figure it out. You know what I'm saying? Uh, I love the NBA, man. My fantasy league is taking a beating, man, because dog. So I had Kevin Durant on the shelf for 6 weeks. Zion Williamson still on the shelf.
that boy been on a shelf for his whole career, it
Since
seems like.
I don't know why I drafted this, but Kelvin Porter Jr. from the Rockets been on the shelf for a month. Earlier in the season, Harden missed a month. Chris Paul missed a month. All
Yeah.
these are my guys. Dog, I was 10-1. Now I'm 11-7.
It's all right.
They get the only saving grace is they're getting healthy. I just got
Yeah.
Durant back.
Yeah.
Yeah. Zion, I don't think it's coming back.
Oh,
Kelvin
Zion
Porter
will ever
Jr.
play
just got
again.
him back. Yeah. So, you know,
Zion, like, what was that boy out of Ohio State? Greg Little?
Greg
That big
Oden.
7 foot
Greg Oden. I think
dude
it's
that had the
Odom.
foot problems and never played.
Yeah. He just like it, man. I was hoping it wouldn't be the case, but yeah. The boy is so explosive, man. His body can't handle it.
Yeah, well, I'll tell you what, Zion is a freakish athlete. I'm not taking anything away from Zion on the fact that unfortunately he's been injured. Not that it's ever his. I mean, it ain't never somebody's fault to make it injured,
Right.
but that dude can play ball. Zion is a man child,
Right.
dude. You know it, I know it. That dude
Yeah.
is really, really good.
He'll
Really
average
good.
he'll average 25 and 10 on like 8 for 10 shooting. I mean, he's so efficient. It's crazy, man.
Yo,
I'll be
it's
like,
nuts.
yeah,
It's
it's
nuts.
crazy, dude.
So, yo, I'm gonna tell you this book that I'm listening to. All right? It's called Common Stocks and Uncommon Profits, written in 1957. All right.
Hold on, man. You gotta say that again, man.
Common Stocks and Uncommon Profits,
Okay.
written Philip Fisher, written in like 1956, 1957. This is dating back like where Buffett and those guys all learned. Like I'm finding more and more people out there that are following the value investing.
Okay. And so
So anyway, I
that
started listening to it, man. And it's good.
so
It's good.
it's narrated by the writer or by somebody else.
I think it might be narrated by, well, no, um, whoever's reading. I don't know whoever's writing. It might be the guy. But the
Okay.
beginning talks it's from the guy that wrote it, his son's perspective,
Okay.
like the prologue. You know what I mean? You know what I mean? Like everything going into the book.
Okay.
Anyway, it talks about all the stuff that his dad talked about, man, as far as what to look for in companies and
Hmm.
value investing, man. You think about it, you want to buy a company, a really good company
It sounds a
at
lot
a
like
decent price as opposed to an okay company at a
yeah,
great price. You know what I mean?
absolutely. It sounds it's
So,
what it has a lot of Warren Buffett principles.
yeah, I think some of the stuff in there's, Warren Buffett and these guys kind of work together. And I said, listen to Warren's Way is the other one to listen to, right? Warren Buffett Way. Got a
But
bunch of
this
stuff in this.
but this one
This
was
was
written
good, man. Common stocks, uncommon profits.
in 1952.
50 something, 56, 57, I think.
Okay. All right.
But
All right. Yeah.
look, if you
I'm gonna
ain't
check
knowing
it
it,
out,
man,
man.
check this out. I used to have Audible. I know people can't see this, right? Where's my damn camera? I got it.
There we go.
There it is. Hoopla. All right. And it's through the, like mine's through the Brazoria County Library System.
Okay.
And it's free.
Okay.
You get audio books, you get ebooks, just like if you were at the library. They don't have everything. I mean, this one has almost everything I found.
And
But
it's an app on your phone.
and you get
Okay.
all the ebooks you want, audio books. So like I said, man,
That's what's up, man. That's
so
what's up.
I'm trying to tell you that, man. Common stocks, uncommon profits.
Appreciate it, man. I don't have a book ready today. I'll have
No, I only thought about it, dude, because I was listening the other day and I said, yo, man, I got to let them know about this book. And that's for everybody else that's watching everything. I mean, the follows everything. I'm not, it's not, I wasn't directed towards y'all either, but
already.
I tell my man, we ain't done this in a minute, man. So I'd love to know, look, it's one of the ones I'm reading.
Yes, sir.
I'm saying,
Cool, man. Cool. Appreciate it, big dog.
All right, man. Y'all glad basketball season's done. Get to see what it's like to be,
All
at
right.
home.
Just work
At
and
home.
not
Be at home.
teach, not
Yep,
coach.
that's right.
Yeah, man.
I'm good with it, man. I appreciate you having me on, dude. I like StreamYard. I've seen the market watch. I've seen the news coming across. Anybody ain't noticed, peep game,
Already.
because we can get back on.
Yeah. I'm learning more and more about this, man. It's only gonna get better. We're gonna get the live comments going and stuff too.
Yes, sir. Get these people to jump on and join us. So,
You guys are watching Market Watch. That's Eddie Chinea.
appreciate it, y'all.
Erik T. Jackson, HBCU Capital in the building.
Yes, sir. Like always, man. Appreciate you having me on. Yo, next week, let's do it again.
Yeah,
Let's get on it.
already. Thanks,
All right,
man.
brother. Appreciate it. Y'all take care.